It is the final day of the first quarter, and we're taking a look back as part of our series, Quarter of Chaos. The first 3 months have seen unrest in North Africa and the Middle East and a nuclear crisis in Japan after, of course, an earthquake and a tsunami. The U.S. here, no V-shaped recovery, and the debt crisis in Europe definitely continues to rage on. But through it all, U.S. stocks are up. Our next guest had predicted a collapse in the first quarter, but equities are looking at a 5% gain year to date. Joining us now is Gijsbert Groenewegen. He runs a precious metals hedge fund as founder of Silver Arrow Capital Management. And Gijs, I'm going to say you kind of predicted Absolutely. Black swan events.
True.
You said we'll see exogenous shocks, one of my favorite jargon terms, but they didn't bring the market down, or at least not permanently. Why?
Well, I think there's still a lot of money to be spent, and the bear market really starts when all the money is spent. And I don't think that has happened yet. And, so that's why the markets haven't given way. But if you look at the consequences that the Middle East could have, in terms of oil prices and oil supply going forward, because, it all happens, with great optimism, but the question is what is the result of it? Yeah.
But doesn't it look like everything there is kind of under control, with the exception of Libya? I mean, Saudi Arabia doesn't see the massive unrest that we were afraid of?
Not yet, but look at Syria. I mean, that could be the next bastion that's going to go. But the other point, of course, I want to make is Japan. I mean, it's awful what happened there in terms of nuclear contamination. But they will need 250 to 300 billion, and their debt to equity of debt to GDP ratio is already in excess of 200%. So, the burdens are only getting bigger, and not only in Japan, in the US, and now we see also that, the ECB wants to increase its interest rates by 0.25%. That's not going to help the housing market. That's not going to help the Portuguese or the Spaniards, which have a very difficult housing market. Also, you look at the Kayas, what they're trying to do in terms of merging those. So, I still don't think we are out of the woods for a long time. And the last point I would like to make is, if you look at the housing market in the US is not recovering. Housing starts in February were down 22%. Since the peak in 2006, the housing market is down 33%. In the Great Depression, it was down maximum 27%. And it is as if we go on as nothing is happening.
Well, no. I mean, it's clear that there's a lot of pain out there. Obviously, the human tragedy in Asia and in the Middle East is horrible. Europe, the crisis is bad. Is this one of the reasons that we continue to see metals prices climb? You have championed silver, and it's done, to your credit, a lot better than gold, right? Up 20% so far year to date, whereas gold's only up 1.5%, 2%.
Well, when I was here last time, I said if it breaks at 32, it could easily go to 45 or 50. That is the former high. And we see that it's moving in that direction. Yeah. And the reasons why I think silver is really benefiting is because it's a smaller market, a much smaller market than gold. And next to that, it's also an industrial metal. So it also benefits from industrial activity, especially in the emerging countries and so on. So, and the last but not least interesting factor is that I think that there are a lot of people buying physical. And there is not that much physical silver around. So that is also a factor that is putting upward pressure on the silver price. And as a result of that, we have seen the gold-silver ratio come down from the average, which was about 52 or 58, 57, around those levels, now to around 37, 38.
Is it, by the way, a little bit scary to play around in the metals market? Because you don't see a lot of people talking about it on financial news television, but these are markets that could be pretty easily manipulated, and there are a lot of allegations out there.
True, but you have to look in the end for what is real value or what is the intrinsic value in the long term. Yeah, we might see some very volatile moves if you would get a sell-off in the markets, because then everything is going to be sold purely in order to liquidate positions. And I think it's the short-term treasuries and the dollar that's going to gain. Because if you look at the dollar, since mid last year, the dollar index has lost 15%. I mean, and if you would look at the chart, for example, of the gold price in dollars and the gold price in euros, you get a completely different picture. And then you would see that perhaps, the gold price is not as advancing as much as we would see.
Gijs, you would think that during these tumultuous times, people would flock to gold as a safety haven. Yesterday, Carol and I were talking to Mark Faber, and he is saying he'll go to a conference with 1,000 hedge fund managers, and 5 of them will raise their hand when he asks who owns gold. You think it's such a broadly held asset class. Do you find as well that people don't hold it as much as you might think?
Well, I think that there's still a lot of people who are very hesitant vis-a-vis gold and its monetary function. But you have to ask yourself, how come it has been the best performing asset class, say, since 2001? Yeah? I mean, the price then was $255. We now look at $14.40. Same for silver, was $4. We look at $37.
So why, when we're talking about the quarter of chaos here, you have the earthquake and the tsunami, you have the unrest in Egypt, you have the what's turning into a civil war, or it has already, in Libya. You've got the debt crisis almost spinning out of control at this point in Europe, and gold has only risen 1.5%. Why?
I agree with you, because gold should have gone much, much higher on the back of that. But I think that it's more a psychological factor that suddenly will turn people's mind. That they get wrong-footed and the perfect black swan that comes around. Yeah, I've also been surprised, because if you look, like I said to you, on the long-term consequences of the Middle East and Japan in terms of its financing, its deficit and so on, you would come to the conclusion that we're further undermining the financial system. So what do you buy? You buy gold. Yeah? On the other hand, what you also see is that gold often goes up in anticipation of inflation. And we all know that, for example, today we had the reports on the corn harvest and so on, and that food prices keep on rising, and I don't think that they will come down. So that's another element that is playing. But
another reason it should go up then,
yeah.
and we don't see the gain.
True.
Gijs, thanks so much for stopping by. We appreciate it.
You're welcome.
Gijsbert Groenewegen there from Silver Arrow Capital.